This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Brent oil slipped in a volatile session on Tuesday as persistent concerns about global economic growth outweighed supply curbs and prompted investors to take profits on the previous day's gains. The focus in the wider financial market is firmly on the release on Wednesday of the minutes of the U.S. Federal Reserve's latest meeting, after recent data raised the risk of interest rates remaining higher for longer. Global benchmark Brent crude was down 44 cents, or 0.5%, at $83.63 a barrel by 14:35 GMT. U.S. West Texas Intermediate crude for March, which expires on Tuesday, was up 32 cents at $76.66.
The price of permits on the European Union's carbon market hit €100, $106.57, per tonne for the first time on Tuesday, a milestone that reflects the increased costs that factories and power plants must pay when they pollute. The benchmark EU allowance, EUA, contract rose to a high of €100.70 per tonne and was trading at €100.21 per tonne by 11.35 GMT. EUAs are the main currency in the European Union's emissions trading system, ETS, that forces manufacturers, power companies and airlines to pay for each tonne of carbon dioxide they emit as part of the bloc's efforts to meet its climate targets.
Moving on to the top news in the energy sector.
India on Monday invoked an emergency law to force power plants that run on imported coal to maximize output ahead of an expected record surge in power usage this summer, according to an internal power ministry notice seen by Reuters. Many of India's power plants that use imported coal, including those owned by Adani Power and Tata Power in the western state of Gujarat, have not operated at full capacity recently because they have found it difficult to compete with power generated from cheap domestic coal. Reuters reported last month on India's plans to use the law to maximize coal power output.
With a little over a month to go for peak shopping season during Ramadan, the head of Pakistan's retail industry body is shuttling between meetings, pressing officials to relax orders that forced malls to shut by 8:30 p.m. to save energy. More than 40% of annual retail sales occur in the 30 days of the holy month, and malls are packed between 8 p.m. and 10 p.m., Tariq Mehboob, also the chief executive of Pakistani menswear franchise Royal Tag, said in a letter to the government. Early closure could result in job losses for 3 to 4 million people, Mehboob wrote. Next, we have the top news in metal markets. India's imports of Russian steel rose to an 8-year high during the first 10 months of the financial year that began in April 2022, government data compiled by Reuters showed. India, the world's second-largest crude steel producer, imported 281,000 tons of steel from Russia between April and January, nearly 5 times higher than the same period a year ago, the data showed. The rising imports are the result of shift in Russian steel trade flows to Asia after Western sanctions were imposed on Russia after its invasion of Ukraine last year. The changes displacing some traditional suppliers and domestic steel producers are raising concerns about potentially losing market share to the lower-priced imports.
The spot price of iron ore is being pushed higher in a pincer move of stronger Chinese demand and lower supply from the world's two biggest exporters of the steel raw material. The spot price of benchmark 62% iron ore for delivery to North China, as assessed by commodity price reporting agency Argus, rose to $128.80 a ton on Monday, just shy of the peak so far in 2023 of $129.50 reached on January 30th. The price has gained 5.7% over the past week and is now 63% higher than the 2022 low of $79 a ton, hit on October 31st.
We will now look at the top news in the agricultural.
China will further expand the scope of its trial of the industrial application of genetically modified, GM, corn and soybeans, the Ministry of Agriculture and Rural Affairs said on Tuesday. Last week, Reuters reported China would likely plant 4 million mu, 267,000 hectares or 660,000 acres, of genetically modified corn strains this year as part of a large-scale trial, citing two industry sources with knowledge of the plans. China has studied GM food crops for decades but has not approved them for commercial release due to opposition to the technology. However, their usage has been increasingly supported by the central government amid a national drive for greater self-sufficiency in the country's key food supplies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.